EPK Capital presents Deep Dive, Palantir. Hello everyone, welcome to EPK Capital's Deep Dive video. I am your host, Sneha. In this series, we analyze one company each day based on the security analysis by Benjamin Graham. Today we are going to talk about Palantir. Palantir Technologies is a company that defies simple categorization. It operates at the intersection of national security, big data, and artificial intelligence, making it a central player in some of the most critical and controversial events of the 21st century. Its software has been credited with supporting counterterrorism operations, tracking the spread of pandemics, and optimizing the supply chains of global corporations. Yet, it has also been criticized for its role in government surveillance programs and its work with immigration enforcement agencies. This creates a fundamental tension that is key to understanding the company. How can an organization born from the mission to reduce terrorism while preserving civil liberties become one of the most polarizing names in both technology and finance? To answer that, we must go back to its origins. The company and its architects. Palantir's story begins in the shadow of the September 11th terrorist attacks. The 9/11 Commission report highlighted a critical failure of imagination and coordination among U.S. intelligence agencies. The necessary data to prevent the attacks existed, but it was siloed and couldn't be connected. Peter Thiel, a co-founder of PayPal, saw a parallel. At PayPal, his team had developed sophisticated pattern recognition algorithms to combat financial fraud by tracking complex money flows. Thiel believed this same technology could be applied to trace terrorist financing and connect disparate intelligence data points, potentially preventing future attacks. In 2003, Palantir Technologies was founded with this mission at its core. The company's name itself is a nod to J.R.R. Tolkien's Seeing Stones from The Lord of the Rings, powerful artifacts used to see across vast distances. From the outset, Palantir was different. While most Silicon Valley startups were chasing consumer apps and advertising dollars, Palantir sought out the most secretive and demanding client in the world, the U.S. intelligence community. Its first and most crucial outside funding came from In-Q-Tel, the CIA's own venture capital arm, a fact that cemented its deep state credentials and set it on a unique path. This unique mission required a unique style of leadership, which it found in its two most prominent figures, Peter Thiel and Alex Karp. Peter Thiel, the company's co-founder and chairman, is a legendary and often controversial figure in Silicon Valley. As a member of the influential PayPal mafia, he has a track record of backing transformative companies. Thiel is a self-described libertarian with a focus on individualism over community, and his vision was to create a program that could help the government achieve its security objectives without resorting to the arbitrary methods that compromise citizens' rights. His political influence and visionary status provide Palantir with a connection to the anti-establishment, innovative spirit of Silicon Valley. Alex Karp, the CEO, is the antithesis of a typical tech executive. Recruited by his friend Thiel from their days at Stanford Law School, Karp holds a PhD in neoclassical social theory from Germany and had no prior experience running a startup or engineering team. His unconventional background was a deliberate choice. Thiel needed someone who could navigate the complex ethical, legal, and political landscapes of selling highly sensitive technology to government agencies. Someone who could speak the language of governance and philosophy, not just code. The dynamic between Thiel and Karp is more than just a corporate structure. It is a core strategic advantage. A typical defense contractor CEO would struggle to attract the elite engineering talent necessary to build cutting-edge software. Conversely, a standard Silicon Valley CEO would likely fail to earn the trust of secretive, bureaucratic government agencies. Palantir, through the Thiel-Karp partnership, bridges this gap. Thiel's venture capital prowess fuels innovation and attracts top talent, while Karp's philosophical approach provides the credibility needed to engage with governments on sensitive matters. This duality allows Palantir to build mission-oriented products that appeal to both a sense of patriotic duty and a culture of elite technological problem-solving, creating a competitive moat that is incredibly difficult for others to replicate. The operating system for modern enterprise. Palantir's business is built on a suite of powerful software platforms. To understand the company, it's essential to understand what these products actually do. Palantir Gotham. This was Palantir's original platform, designed specifically for the government, defense, and intelligence communities. It can be thought of as a digital detective's workbench. Gotham's core function is to integrate vast and varied data sources, from signals intelligence and drone footage to confidential informant reports and spreadsheets, into a single, unified view. By creating a model of the real world from this data, analysts can uncover hidden patterns, visualize complex networks, and identify threats that would otherwise be invisible. It is the tool used in counterterrorism, military planning, and law enforcement investigations. Palantir Foundry. Launched in 2016, Foundry is the commercial counterpart to Gotham, designed to bring the same level of data integration to the private sector. It acts as a digital twin of an entire organization, creating a central operating system for its data. Companies like Airbus use it to manage complex supply chains and accelerate aircraft production, while financial institutions use it to detect fraud and manage risk. Foundry empowers all users within an organization, from C-suite executives to factory floor operators, to make data-driven decisions in real time. Palantir Apollo. If Gotham and Foundry are the cars, Apollo is the autonomous, self-driving mechanic that keeps them running perfectly. It is the brain behind the platforms. Apollo is a continuous delivery system that automates the management and deployment of software. This is a critical technical advantage. It allows Palantir to update Gotham and Foundry constantly and securely across any environment, whether it's a public cloud like Amazon Web Services, a secure on-premise government server, or even a disconnected device on a battlefield. This ensures that all customers, regardless of their infrastructure, are running the latest, most secure version of the software with minimal human intervention. Palantir AIP, Artificial Intelligence Platform. This is Palantir's newest and most talked about platform. It is designed to solve one of the biggest challenges for enterprises today: how to safely and effectively use large language models, LLMs, like ChatGPT with their own private sensitive data. AIP acts as a set of guardrails. It allows organizations to connect LLMs to their internal data networks while ensuring the AI provides reliable, verifiable answers and doesn't hallucinate or leak confidential information. It enables companies to build their own private AI assistants and automate complex tasks, positioning Palantir at the forefront of the enterprise AI revolution. Decoding the financials, a journey to profitability. For most of its existence, Palantir was a secretive, private company that consistently lost money. However, since its direct listing in 2020, its financial picture has transformed dramatically. The numbers reveal a story of explosive growth and a critical pivot to profitability. The revenue engine. Palantir's revenue growth has been both rapid and consistent. The company has maintained a compound annual growth rate, CAGR, of over 25% since 2018, a remarkable feat for a business of its scale. This growth is fueled by two distinct engines: government and commercial contracts. While the government segment still accounts for the majority of revenue, the commercial segment, particularly in the United States, is growing at a much faster pace. In the second quarter of 2025, for example, U.S. commercial revenue surged by an astonishing 93% year-over-year. This demonstrates a successful strategy of diversifying away from its initial reliance on government spending and proves the broad applicability of its Foundry platform, the path to profitability. For nearly 2 decades, Palantir operated at a loss, a fact that was a cornerstone of the bearish argument against the company. The primary criticism was that its high-touch, service-intensive business model which often required teams of expensive forward-deployed engineers to customize solutions for each client, was fundamentally unscalable and could never be profitable. However, 2023 marked a historic inflection point. For the first time in its 20-year history, Palantir achieved a full year of GAAP profitability, reporting net income of $210 million. This was not an anomaly. The company has now delivered multiple consecutive quarters of positive GAAP net income, silencing the long-standing criticism about the viability of its business model. This achievement is arguably the single most important event in Palantir's financial history. It fundamentally shifts the debate about the company. The question is no longer if the business model can work, but rather, what is a fair price to pay for its future growth? By proving its model can be profitable at scale, Palantir has moved from a speculative venture capital-style bet to a legitimate high-growth technology investment, changing its risk profile and attracting a broader base of investors. A fortress balance sheet. Beyond its income statement, Palantir's balance sheet is a source of immense strength. The company holds negligible levels of debt, a rarity for a technology firm of its size. As of mid-2025, its total debt stood at just $239 million. This is dwarfed by its massive cash position. As of the second quarter of 2025, Palantir had $6.0 billion in cash equivalents, and short-term U.S. Treasury securities on hand. This results in a large negative net debt position, meaning the company could pay off all its debts many times over with the cash it has available. This financial fortress is not merely a defensive measure, it is a strategic weapon. It provides the capital to fund aggressive research and development, pursue strategic acquisitions, and navigate economic downturns without needing to dilute shareholders by raising external capital. Margin analysis. A look at Palantir's margins reveals the underlying health of its business. The company boasts impressive gross profit margins that are consistently around 80%. In simple terms, for every dollar of software and services it sells, it retains about 80 cents after accounting for the direct costs of that sale. This high margin indicates a highly valuable and differentiated core product. Furthermore, as the company has scaled and become more efficient, its operating margins have steadily improved, turning positive in line with its net income. This trend demonstrates increasing operational leverage, suggesting that as revenue continues to grow, a larger portion of each new dollar will fall to the bottom line as profit. The stock's story. Technicals and valuation. Understanding Palantir's financials is only half the story. To get a complete picture, we must also analyze the behavior of its stock and what valuation metrics tell us about its current price. The chart's narrative. Since its direct listing in September 2020, Palantir's stock, ticker PLTR, has been on a wild ride, characterized by high volatility. The long-term chart reveals three distinct phases. First, an initial period of intense hype and retail investor enthusiasm drove the stock to dizzying heights in late 2020 and early 2021. This was followed by a prolonged and brutal bear market that saw the stock shed a significant portion of its value. The third and current phase began in 2023, marked by a powerful and sustained uptrend. This resurgence has been fueled by two main catalysts: the company's achievement of GAAP profitability and the explosion of market interest in artificial intelligence, which has placed Palantir directly in the spotlight. Key levels to watch. From a technical perspective, there are several key price levels that traders and investors are watching. On the downside, the stock has found significant support from accumulated volume around the $173 level, a price point where buyers have previously stepped in. A break below this could signal a short-term shift in momentum. On the upside, the stock faces resistance near the recent pivot high of approximately $183, and, beyond that, its all-time high in the vicinity of $190.35. These levels represent psychological barriers where sellers may emerge to take profits. Reading the momentum. One of the most common indicators for measuring momentum is the Relative Strength Index, or RSI. The RSI is a momentum oscillator that measures the speed and change of price movements on a scale of 0 to 100. A reading above 70 is typically considered overbought, while a reading below 30 is considered oversold. As of mid-August 2025, Palantir's 14-day RSI stands at 66. This reading indicates strong positive momentum, but is not yet in classic overbought territory. It suggests that while the stock has had a powerful run, the upward trend still has strength behind it, though it warrants close monitoring for signs of exhaustion. The value investor's verdict, a Benjamin Graham test. To assess the stock from a classic value investing perspective, we can apply the Benjamin Graham number. Graham, known as the father of value investing, developed a formula to determine the theoretical intrinsic value of a stock based on its earnings and assets. His philosophy was that a defensive investor should never pay a price that isn't justified by the company's tangible performance. The result is a Graham number of approximately 432. When we compare this to the stock's current market price of around $177, the conclusion is stark. By this classic value investing metric, Palantir stock is profoundly overvalued. This massive disconnect, however, reveals something crucial about how the market is thinking about Palantir. The gap between the Graham number and the market price shows that investors are not valuing the company based on its current earnings or its tangible book value. The Graham formula is designed to measure what a company is worth today. The market price, in contrast, reflects what investors believe Palantir could be worth a decade from now. They are pricing it not as a conventional software company, but as a long-duration call option on the future of artificial intelligence and its potential to become the default operating system for Western governments and enterprises. The Graham test, therefore, is useful not in determining a correct price, but in quantifying the immense growth expectations and the powerful narrative that are already baked into the stock. The investment thesis, the bull versus bear debate. The extreme valuation and polarizing nature of Palantir lead to a sharply divided investment community. Both the bull and bear cases have compelling arguments. The bull case, reasons for optimism. AI leadership and a massive market. Bulls argue that Palantir is not just participating in the AI revolution, it is a key enabler of it. Its AIP platform is seeing explosive demand as companies rush to deploy AI safely and effectively. The total addressable market for AI and data analytics is projected to be in the hundreds of billions, meaning Palantir has a vast runway for growth. An impenetrable government moat. Palantir's long-standing, deeply integrated relationships with the most sensitive agencies in the U.S. government, such as the CIA and the Department of Defense, create a competitive advantage that is nearly impossible to replicate. These are not simple software contracts. They are mission-critical partnerships built over decades, making the customer base incredibly sticky. Accelerating commercial adoption. The narrative that Palantir is just a government contractor is being dismantled by the data. The company's U.S. commercial business is growing at a blistering pace, proving that Foundry is a compelling solution for the private sector, and that the company can successfully expand its reach. A compounding business model. Palantir employs a land and expand strategy. Once its platform is embedded in an organization, it becomes the central nervous system, making it very difficult and costly to replace. This is evidenced by its strong net dollar retention rate of 120%, which indicates that the average existing customer increases their spending by 20% each year. This creates a powerful compounding revenue stream. Financial fortress. As previously discussed, the company's balance sheet is pristine. With billions in cash and virtually no debt, it has the financial stability and strategic flexibility to invest in growth and weather any economic storm. The bear case, reasons for caution. Extreme valuation. This is the undisputed centerpiece of the bear case. Palantir trades at valuation multiples that are in the stratosphere, with a price-to-sales ratio well over 100 and a forward P/E ratio exceeding 200. This valuation prices in years, if not a decade, of perfect execution and flawless growth. Any misstep, any slowdown in growth, could lead to a severe downward re-rating of the stock. Intense competition. While Palantir has unique strengths, it is not operating in a vacuum. It faces formidable competition from the world's largest and best capitalized technology companies, including Microsoft, Amazon Web Services, and Google, all of which are investing heavily in their own data and AI platforms. It also competes with more specialized, high-growth data platforms like Snowflake and Databricks. Reputational and ESG risk. The company's work is inherently controversial. Its deep involvement in government surveillance, military applications, and its contracts with agencies like ICE make it uninvestable for a growing number of ESG, environmental, social, and governance-focused investment funds. This reputational risk could also limit its appeal to some commercial customers who are wary of being associated with its more controversial government work. Questions of scalability. The bear case still harbors doubts about the scalability of Palantir's business model. While profitability has been achieved, the company's reliance on highly skilled, expensive, forward-deployed engineers for implementation and customization could limit how quickly it can grow compared to more self-service, plug-and-play SaaS competitors. Due diligence, controversies, and market position. No analysis of Palantir is complete without a direct examination of the controversies that define its public image and a clear-eyed assessment of its position in the competitive landscape. A history of controversy. Palantir's work has consistently placed it at the center of ethical debates surrounding privacy, surveillance, and the use of technology in law enforcement and defense. Partnership with ICE. The most prominent controversy surrounds Palantir's software being used by U.S. Immigration and Customs Enforcement, IC. Critics and human rights organizations like Amnesty International allege that Palantir's technology has been used to plan workplace raids and track migrants, contributing to family separations and deportations. Palantir has defended its work by stating its contracts are with Homeland Security Investigations, HSI, the Criminal Investigative Division of ICE, and not with Enforcement and Removal Operations, ERO. Mass surveillance concerns. The company's work with the National Security Agency, NSA, and the UK's GCHQ on mass surveillance programs, some of which were exposed by whistleblower Edward Snowden, has fueled fears that its technology enables a powerful surveillance state with the potential for abuse. Predictive policing. The use of the Gotham platform for predictive policing by some law enforcement agencies has drawn sharp criticism. Opponents argue that these AI-driven systems can perpetuate and amplify existing racial biases in policing, leading to disproportionate targeting of minority communities. These controversies present a clear risk, but they also function in a complex and counterintuitive way. For an ESG-focused fund or a privacy-conscious European company, a headline about Palantir's work with ICE is a major red flag. However, for a defense or intelligence agency, that same headline can act as the most powerful form of marketing imaginable. It serves as a testament to the software's power, security, and effectiveness in high-stakes, real-world operations. The brand's toxicity in one domain paradoxically becomes a signal of its credibility and strength in its most lucrative and defensible core market. Global standing and competitive landscape. Palantir operates in a crowded and fiercely competitive market. Understanding its position requires categorizing its rivals. Competitor category, key players. Primary focus, Palantir's key differentiator. Cloud hyperscalers, Microsoft, Azure, Amazon, AWS, Google, GCP, providing foundational cloud infrastructure and a suite of individual data tools. an integrated end-to-end operating system that works on top of any cloud. Focus on the ontology layer that connects data logically. Modern data platforms: Snowflake, Databricks cloud-native data warehousing, Snowflake, and big data processing for AI/ML workloads, Databricks. A full-stack platform for both technical and non-technical users, from data integration to operational applications. Less about storing data and more about building an operational model on it. Legacy Enterprise and Analytics IBM, SAP, Oracle, Alteryx. Providing a wide range of enterprise software, often with less integration and a more traditional siloed approach. A modern, unified architecture built for complexity and security from the ground up. Often replaces dozens of legacy tools with one platform. Palantir's unique position is that it bridges the gap between a traditional defense contractor and a modern commercial SaaS company. While its overall market share in the vast big data category is small, estimated at around 1.5%, its dominance within its specific niche of high-security, complex data integration for government and mission-critical commercial applications is unparalleled. Its key differentiator is the ontology, the creation of a semantic layer that models an organization's real-world operations, allowing AI to understand the context and relationships within the data. This is what transforms raw data into an actionable digital twin of the enterprise, a capability that competitors struggle to match in a single, integrated platform. Final verdict and disclaimer. Synthesizing the analysis. In synthesizing this deep dive, a complex picture of Palantir Technologies emerges. It is, without question, a technologically elite company at the absolute forefront of the artificial intelligence revolution. It has successfully transitioned from a perpetually unprofitable, secretive government contractor to a publicly traded, GAAP profitable enterprise with a fortress-like balance sheet. Its competitive moat in the government and defense sectors is deep and well protected by decades of trust and integration. However, this technological prowess and market position come at a steep price. The company is burdened with significant ethical and reputational baggage that will likely always limit its appeal to a certain segment of the market. More importantly for investors, its stock trades at a valuation that is pricing in years of continued, flawless execution. The margin for error at these levels is razor thin, and the stock remains highly susceptible to shifts in market sentiment. Closing statement and disclaimer. Ultimately, Palantir represents a high-risk, high-reward proposition. The story is compelling, the growth is undeniable, but the price is steep. As always, this analysis is for informational purposes only and is not financial advice. Do your own research before making any investment decisions. Thank you for watching.